We're going to pivot now. Market flash on Robinhood. Kate Rooney has some breaking news on that. Kate.
Hey, Wolf, shares of Robinhood are lower after SEC Chair Gary Gensler says that a full ban of payment for order flow is, quote, on the table. This wasn't in an interview with Barron's on Monday. Gensler also saying that the practice has, quote, inherent conflicts of interest. He talks about the spreads they get, but also the data some of these market makers receive. Payment for order flow is how Robinhood makes the majority of its revenue. Other brokers also use this to offer free trading. They make money on the back end. Charles Schwab shares are also under pressure after these headlines. And the CFO of Robinhood told us recently that he does not expect the SEC to ban payment for order flow. We talked about that, resulting in higher prices for consumers. Shares of Robinhood had been lower ahead of these headlines, but again, taking a hit here ahead of the close. Shares down as much as 8% now. Back to you.
Kate, thanks so much for that. I mean, definitely, as you said, lower before this, but moving significantly lower off the back of these headlines. Mike, just trying to glance through those comments in context within what's been released of the article. It does seem quite serious weight behind what he's saying there, albeit still sort of feels unlikely he'd go to an outright ban or would not do so without kind of further consultation. Clearly, an outright ban would be very bad if it came suddenly for Robinhood's business model. One wonders whether he'd go straight to that anytime soon.
Well, it would be a long process. There's always a rulemaking process. It goes open for comment. The industry tries to sway things. But he's been pretty steadfast about really believing that the current system, and not just the payment for order flow, but just the way market structure has developed right now, where there's so much volume that basically never goes into sort of a public, transparent forum like a public exchange. And so this could be part of a very broad revamp of the way things are traded on a wholesale basis. It absolutely would put a Robinhood or other retail brokers in a bit of a squeeze, because presumably they're not going to be able to go back to charging commissions, or in Robinhood's case, start charging for commissions. You'd have to make it up somewhere else. Just for context, I mean, industry estimates and some of their disclosures say that the payment for order flow received by the firms is on the range of a sixth to a quarter of a cent per share. So it's not as if they make boatloads of money per share, but just basically right now everyone's conditioned. I trade free. You figure it out how you get paid for this stuff on the other end.